So in this video, I'm going to be going over the top 5 lessons that I've learned from Rick Rule. For those of you who don't know who Rick Rule is he's kind of a legendary resource investor, so kind of in the commodities sector. He's been working with Sprott Asset Management, and he actually had that before he had his own firm. I can't remember what it was called, but he basically had his own firm, and that was bought out by Eric Sprott and Sprott Resource Management and turned into the US branch of Sprott. But yeah, lots of experience and pretty well known. So the first lesson I learned from Rick Rule is you don't need to capture every opportunity. Just because there's opportunities out there, it doesn't mean you need to go for each and every one of them. It's generally better to focus on the things that you know and understand, and not necessarily the things that just have like the greatest shine to them or something like that. So right now, that's kind of example is crypto. It's kind of gone up on a very dramatic basis, and so obviously a lot of people wish that they had invested in it, and a lot of people are interested in investing in it going forward. But just because it has gone up doesn't mean that you have to invest in it to find financial success. For him, it's like he kind of looks at it as like I'm going to focus on what I know and understand and what makes sense to me. And then I found financial success through that process. And if you think of it kind of like in a job perspective, it's like you don't need to have every profession in order to make money. It's like a dentist doesn't have to know the things that maybe a doctor knows or a carpenter knows and stuff like that. It's like we can specialize and find our own area kind of expertise, and that's all we really need. It's like we don't need to have every opportunity, make all the money in the world. It's like we really just, it's like if we can make enough to get by and have a comfortable life for ourselves, that's really all it's kind of need to understand. So for me personally, I understand cash flowing commodity producers the best. Crypto, it doesn't make a whole lot of logical sense of what's going on there for me. But with commodity producers, I can basically project their revenue. So it's like, okay, here's how many ounces of silver or gold or platinum or palladium that they're going to produce this year. And then I can project their costs. It's like, okay, so they're producing this much, and here's their all-in sustaining costs. And then I can estimate what their earnings are. And then that's just going to tell me what it's going to be looking like going forward, kind of like the profitability on that investment. So that one's a good one for me. It's just a reminder. It's like because you can definitely get the FOMO if you're missing out and you want to hop onto it, but it's like generally I think it's best to stay in your lane and find something that works for you. So lesson number 2 is when something has doubled in price, it has become arithmetically half as attractive as it was before. So if you went to the store and you saw tuna went on sale for 50% up, you'd load up. You'd load up your cart. But when people see a stock that they own being down 50%, generally they become frustrated or disgusted with it, often looking to sell it off. And it's kind of like our natural biases is that when we're investing, it's like we want to buy something at the low and then basically see it go up and up and up every day forward. But it's just like that's just a very unreasonable expectation. And ideally, it's like what we'd figure out is we determined what the value of that stock is, and then if it goes down, it's like we're actually happy by that because it's just like the tuna's gone on sale. We're not necessarily super frustrated that we had bought tuna over the last year and it wasn't on sale. It's just like okay, like it's on sale now, and it's great, and I'll take advantage of that. And so really should be the same thing with stocks. But this is something you really have to work through and kind of logic yourself through and like maybe do some journaling and think it through and just kind of get your emotions in order. So lesson 3 is to become a successful investor, you should focus on the value of an asset, not just the price of an asset. So generally speaking, the value of an asset is the cash flow that it can return to the owner. This isn't always the case, but for me, like looking at investment, I think the best determination of is like what's the money that you're getting, the value you're getting back from it. Kind of the exception to that rule is precious metals. That gold doesn't pay a yield, it doesn't pay a return. You can get capital gains from it, but that's it. But that's basically because gold is money. But when we're looking at investments, ideally we want to return on that investment. So generally in the past, it's assets that have a PE ratio of 8 or lower are generally considered a very good deal. And currently, there's 2 stocks that are really like Impala Platinum and Sibanye Stillwater have forward PE ratios of close to 2. This means that they'll basically be returning 50% per year in value for the investor. Um, this is stunning to me, and it's crazy that the market isn't seeing this, isn't interested in it. But it's just like great. I get to get some access to it for very cheap prices. And by knowing the value of the asset, you can now assess if it's cheap or if it's expensive. So when a PE ratio gets to 16 to 20 to 30, to me that's a sign that it's very expensive and it's going to take a long time for me to get my money back. But when PE ratio is 2, it's basically like, okay, I can basically get my money back in 2 years, and then everything off of that is just going to be extra cash flow coming back. And it's like, that's a great deal. So lesson 4, give your best stuff away. So what Rick found as like a business owner is that the best marketing tool that he's come up with is doing free resource portfolio analysis. So kind of the marketing for that first is that he goes on to different interviews and different YouTube channels and stuff like that, goes on to BNN or BBN, Business News Network in Canada here, and basically shares all his best stuff, shares all his ideas. And then kind of like the next step for getting customers is to offer this free resource portfolio analysis, where basically you go to his site, enter all the stocks in that you have in your portfolio, and then he ranks them based on his own rankings of like 0 to 1 to 10 or whatever. And then he'll send you back any notes if he has anything to add to particular stocks. So this is basically a risk-free offer that has extremely high perceived value. It's something I've taken advantage of and no issues with it. And it opens conversation up for him as a business person to talk about with the customer something that's extremely interesting to them. It's like they're interested in their portfolio and what's going on there. And so getting that conversation started now leads to the potential for having kind of business talks, and maybe it's moving into doing private placement deals, or maybe it's, I don't know exactly what their business model is. But at least now you've got a conversation going and you kind of know the background picture of what's going on, and you provided value for them. So a certain percentage of these people are likely to turn in clients. And kind of what he's found is that spending money on marketing is generally a waste of money. And this has been my experience too, that I ran the marketing for a local business for 3 years. And basically what I found is that newspapers, complete waste of money. Facebook, for the most part, didn't work very well. What worked great was Google Ads, because people are already searching for that product. And then, in particular, reviews. Getting our reviews up. We were like one of the lower companies on reviews, and then it was a very big focus for about 2 years, and we got to be like the highest reviewed and have like 240 reviews and stuff like that. And then that just made the whole client process go so much better. So it's like, you really want to figure out how to do your marketing process in the most effective manner possible and really check on results, because often just spending money isn't going to get what you want. So lesson 5. Life is generally more enjoyable if you find your unique niche in the world. Ideally, you want to discover the things that you enjoy doing and eliminate the things that you don't enjoy doing. So for Rick, the things that he really enjoys doing is the interviews where he just gets to talk about markets, investing, and all that kind of stuff. And then he also enjoys credit analysis, so going through the balance sheet, cash flow statements of companies and determine their credit worthiness. And kind of his idea was that his favorite would be to have run an insurance company, where basically people pay you premiums, you take that money and invest it into assets and companies and stuff like that. And then you kind of do a credit analysis on like the insurance risk of what you're likely going to have to pay out for selling those insurance premiums or selling those insurance policies. And then you're also doing the analysis on the companies. And so you're basically getting free money kind of, and you're getting to invest that and get returns on that and kind of build that business from there. So it's kind of like he's now in his, I believe, his 60s, and kind of figured out what the things he likes and the things he dislikes. And the things he dislikes is management, working with compliance with government, and just like the general busy work that comes from owning or managing a company. And so he took a step back from basically being one of the head managers at Sprott and to basically just being a director on the board and kind of like being friends with them, but not actually having any technical board or any technical position in the company anymore that has these compliance regulations and stuff like that. So how do I try to apply these lessons? So for me, I try to focus on games that I enjoy and I feel like I can win. So there's lots of things that I'm just not very good at, and it's kind of like I figure out my temperament. And one thing is I'm relatively low in conscientiousness, and so doing a regular 9 to 5 job is just it's real tough for me. And it's not really all I'm that interested in. But what I am interested in is ideas and teaching and things like that. And so this is kind of like one of my outlets for trying to expand upon that. And the idea is like, oh, like YouTube's such a powerful platform, and it's something that you can teach and you can share, and you can create this virtual classroom that spreads across the whole world, and it's free, and it's kind of like it's everlasting, and it'll actually promote your content organically to have people see it. And so the value that you can create through that is absolutely tremendous. And so I don't know exactly where it could lead, but it's an interesting game that I definitely like to explore. So another thing I try to apply is to buy things when they're on sale, even if they aren't popular. So I had this back in the fall when I kind of realized back last summer that platinum was really undervalued, uranium was really undervalued, oil was really undervalued, just on historical terms. And I'd started buying platinum, but it was really tough because everything I read about the platinum market was so bearish, and it was just like, oh, platinum's only used for catalytic converters for diesel, and blah blah blah, and diesel's not going to be popular anymore, and everything about platinum was like just like super bearish. And so I ended up buying some gold, I bought some silver, and I bought some platinum. And then basically the platinum price went from $800 an ounce US to like $1,200 an ounce US, while the gold and silver price just declined. And then all the positive platinum articles came out, and it's like, oh, platinum's going to be used for hydrogen vehicles, and it's going to be used for this and that, and it's going to be the most amazing thing ever. And so it's like, in hindsight, I really wish I would have stuck to my convictions and what my math had told me and said just load it up on platinum instead of having the silver or gold. But that's hindsight bias too. And the same thing I had with oil stocks is that I bought a bunch of oil stocks back in the summer of 2020, just because I looked at oil and historically it was super undervalued, and I looked at the oil price compared to like Cardinal Energy, and the oil price had declined by about 50%, somewhere in there. But the price of Cardinal had declined by 80%, 90%, and it's just like, well, that's just too much. You mean it's overshot, and if we have an oil price reversion, it's likely that the price of that stock's going to come back to roughly where it was before when the oil price was $60 an ounce. And that actually ended up happening, but I wasn't able to stick it through. It got really bearish sentiment back in October, November, and I bailed out of my trade. And I was like, oh, the whole economy's shutting down, the whole world's going to shut down, and blah, blah, blah. Luckily, my mom had gotten to investing in oil stocks, and she just rode it through. And because of that, her portfolio was up about 50% overall, year over year. And it's like, it's great. So it's tough, but it's like you really want to try to buy things when they're on sale, even if they aren't popular, and maybe particularly if they aren't popular, because that probably means that they're going to have even a bigger run going forward. So I'm also working on my ability to evaluate value. I try to understand the cash flow of an asset produces and determine what is interesting based on that. And so I've been kind of doing these video analyses and figuring out, okay, what's this company estimated to make? What's their expenses? What's their balance sheet look like? And really try to determine, is this undervalued? Is this overvalued? How much am I willing to pay for this and that kind of thing? And it's just an extremely valuable skill. And it's not just for investing in stocks. It's like for renting a house or buying a house. I think that should be applied. Or it should be if you're starting a business or looking to invest in a business. Any of these kind of things, you really should be able to look at the cash flow and look at the balance sheet and see what's going on. So this YouTube, again, it's an experiment in giving my best stuff away. And then I'm also continuing to look to build a life that I love. So this just requires a lot of tinkering and kind of experiments to see what works and what doesn't, and realize that it's not failure. It's like doing an experiment and you mean finding out it didn't work or you made mistakes and stuff like that, it's totally fine. It's just like it's learning activities. And that's what I try to encourage with everybody around me is that there's no necessarily right or wrong decisions. It's just like take some action, learn from it, experiment, and see how it goes, and just use that information going forward. Because the value of taking those actions and experiments is basically going to have residual value for the rest of your life. And you can use those lessons and learn from them. But if you don't take action, you're always kind of wondering what if. And you've never really learned from your actions and seen what happens and kind of developed that courage. So yeah, so these are the lessons that I've learned from Rick Rule and how do I try to apply them to my life. Thanks for watching.